Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today the latest building consent data is released. We update what is happening with bank bill rates, take a look at the latest social benefit claim levels, and we'll wrap up with what the other media are reporting. August building consents issued were more than 8% higher in value than the same month a year ago. In fact, the number of consents issued for residential dwellings rose to just under 2,500, which was not an increase on last year, but an increase over the last month of about 300 or 14%. Included in this increase was a pickup in consent approvals for apartments. This latest data is quite positive, indicating there is plenty of work ahead on home building. But one aspect does deserve closer attention. This activity is becoming more focused on upmarket houses. You can see this quite clearly in the value of consents issued per square metre. Even though that marker fell slightly in August, it is on a definite upward trend. The August cost per square metre was a massive 18.5% higher than a year ago, and the average rise over the past 12 months was well over 10%. In the past 6 months, that average was well over 16%. And don't forget, these increases are just for the building components. Land price changes are additional. Far from being addressed, housing affordability is under severe attack. Apart from a Wellington parliamentary inquiry, which seems to have low priority and low visibility, nothing is being done on the affordability front. The consequences won't be pleasant. Bank bill rates are coming under stress again. Yesterday, the 90-day bank bill rate rose to 8.9%, its highest since mid-August, when the Reserve Bank had to intervene in this important marketplace by easing liquidity requirements. What is troubling about this latest stress is that it could indicate that banks are wary about holding each other's financial paper. They want higher compensation for doing so. When our banks don't trust each other, it raises questions about what attitude we as customers should think about them as well. It is this problem with trust of bank paper that is the heart of the international credit crunch. No doubt the Reserve Bank will be watching these bank bill markers very closely. In mid-August, they did not resolve that stress by increasing liquidity. Rather, they widened the definition of the types of securities that they would accept as part of the bank security ratio. However, this time they may have to consider a liquidity injection if the problem is not resolved by normal market actions. Over the past 10 years, the total number of benefits claimed by working-age people has fallen from about 400,000 to 261,000 at the end of June. This is a huge improvement, one that has been achieved from the reforms enacted earlier to open up our economy. However, almost all this improvement has happened in the unemployment benefit. As we transformed our economy from a protectionist one to an open one, more people were employed in productive activities as our wealth grew. However, there is a nagging suspicion that some of those previously on the unemployment benefit have transferred to other benefits. In fact, the sickness benefit has increased from about 30,000 to almost 50,000 over this period, and the invalid's benefit has risen from 50,000 to almost 80,000. The DPB has stayed level at about 110,000 over most of the 10 years, although it has dipped below 100,000 in the last 2 quarters. When we are short of people to work in our economy, and we lose about 25,000 or so a year to Australia, it is increasingly important that people are encouraged to make the transition from benefits to the workforce. And finally today, a quick wrap-up of some other recent news. Kiwibank's honeymoon with customers may be over, with that state-owned business the only bank to record a reduction in customer satisfaction in the year to June. As countries reform their business regulation, more businesses are starting up. Eastern Europe has witnessed a boom in new business entry that rivals the rapid growth in East Asia in the past. Large emerging markets such as India, China, Egypt, Turkey and Indonesia are reforming fast, and investors are taking note. Singapore is ranked number 1 on the overall ease of doing business for the 2nd consecutive year. New Zealand is ranked number 2, but interestingly we are ranked only number 13 in the ease of hiring workers. You can get more news and stay up with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.